Welcome to Profit Path. In a surprising turn of events, gold has skyrocketed to a brand new record high while Wall Street is looking set for a slight dip. Today, we'll unpack the latest market updates from these surprising moves to changing sentiments towards AI and why hedge funds are trimming their positions in US stocks. And if you're new here, hit that subscribe button for concise daily market updates. All right, let's dive right in. Starting with the markets, US stock futures, the Dow Jones, the S&P 500 and the Nasdaq are all modestly lower today. This comes as investors adopt a wait-and-see approach ahead of this week's pivotal US labor report and inflation figures. These economic indicators are crucial for the Federal Reserve's upcoming policy decisions. The market is currently pricing in a high probability of a 25 basis point rate cut by the Fed this year, with some even considering a more aggressive 50-point cut, depending on how the jobs data may turn out. Now shifting to gold, it's surging to a brand new record high of $3,530 per ounce. This rally is driven by waning investor confidence in the dollar and growing expectations for interest rate cuts. Goldman Sachs raised its gold price targets for 2023 and 2024, boosting its 12-month and 24-month price targets to $3,600 and $4,000 respectively. They see gold as an attractive investment given the current market conditions and the uncertainty surrounding the global economy. Now turning to the rate-sensitive 2-year Treasury yield, it dropped to a 2-week low of 4.82%. This decline is in line with market expectations of a coming Fed rate cut. Now let's discuss the top-performing sectors of the day. Materials and industrials are leading the way with gains of 1% each. However, the real momentum is in gold and silver, which are both up over 2%. On the other hand, tech and healthcare stocks are seeing slight pullbacks, with the tech sector down by 0.6%. Investors seem to be taking profits after these stocks enjoyed substantial rallies last week. Now within the broader market, small-cap stocks are outperforming large caps, with the Russell 2000 index rising 0.6% compared to the S&P 500 as 0.3% gain. Alright, now let's talk about specific movers of the day. Nvidia and AMD are among the top decliners in the S&P 500, with shares falling 2.4% and 1.6% respectively. While Nvidia is still up 225% year-to-date, the recent enthusiasm around AI and semiconductors seems to be cooling off, with some market watchers characterizing the current sentiment as a tactical pause ahead of major macro data releases like the jobs report. Other chip makers like Intel and Micron are also experiencing slight pullbacks, with declines of 1.2% and 0.9% respectively. On the positive side, shares of Oracle are surging by 5.4% after the company provided strong earnings and revenue guidance. Its earnings per share for the first quarter came in at $1.17, beating estimates by 5 cents. Revenue reached $13.3 billion, surpassing both estimates and the company's own expectations. Moving on, let's discuss some key events on today's economic calendar. At 8:30 a.m. Eastern Time, the Job Openings and Labor Turnover Survey for August will be released. This report provides insights into the health of the labor market and can influence decisions by the Federal Reserve regarding future interest rate adjustments. Later today at 10 a.m., consumer credit for July is scheduled to be released. This report offers insights into borrowing and lending trends in the US and can provide clues about consumer spending and the overall economy. Finally, at 1 p.m., the Federal Reserve will announce its decision on the primary dealer's access to the Fed's discount window lending facility. And lastly, let's talk about what some prominent Wall Street firms are saying. Bank of America has downgraded its 2023 S&P 500 earnings per share estimate from $2.15 to $2.11. Despite this, they maintain their year-end target of $4,050 for the S&P 500. Bank of America believes that the third and fourth quarters could see higher corporate profit margins thanks to effective cost-cutting measures. Meanwhile, Citigroup has raised its 2023 year-end target for the Eurozone Stoxx 600 index by 5%, citing positive developments in the banking sector and anticipation of peak interest rates in the Eurozone. And that's a wrap for today's market update. Thank you for joining me. If you found this video helpful, please give it a thumbs up and consider subscribing for more insightful market analysis. See you back here tomorrow. Take care.